welcome to our Twitter space. I am Contessa Louise Cooper, your hostess with the mostest, and the community engagement manager here at Thallo. I am thrilled to be part of this dynamic conversation on the transformation of carbon finance. Today, we have the honor of having Nick Chen to explore innovations, transparency, and sustainability in this rapidly evolving field. Nick brings a wealth of knowledge and experience, making this a session you do not want to miss. At Thallo, we are dedicated to driving positive change in the fight against climate change. We believe that delving into carbon finance, we can uncover opportunities for meaningful impact and create a more sustainable future. So grab a drink, find a cozy spot, grab pen, paper, a tablet, whatever it is that you need to take notes, and get ready to be inspired by the insights and expertise that Nick will share with us. It is time to dive deep into the world of carbon finance and uncover the strategies that will shape the future of sustainability. Nick, are you ready?
I'm ready.
All right. Nick, please introduce yourself to everyone and give us kind of an overview of your path at being the director of carbon at RES. Or is it Res? How do you
Yeah,
say
it's
it?
Res.
Res.
Also
Okay.
RES, but yeah, I'll give you guys sort of a background. So hi everybody that's on the Twitter space. Definitely an honor to be invited. I'm going to share my perspective on the carbon finance side of the space, and then give a little bit of insight on some of the things that I guess we could be doing to improve the space, and perspectives on where the space is going forward as well. A little bit about myself. So I come from sort of more of a traditional finance background. I was in banking with JP Morgan and a couple of other firms in the traditional infrastructure space. So power, energy, telecommunications, those types of things. And after that, I spent a couple of years at McKinsey doing strategy and sustainability consulting. And towards the end of that, really want to kind of get my hands dirty and actually start doing sort of more operations roles and sort of building a business in the space that I really cared about, which was carbon markets and carbon finance. So I joined a company called Flow Carbon, which, like Thallo, is also kind of in the intersection of Web3 and carbon as kind of an early member of the team. There, pretty much dealt directly with carbon finance, both on the supply side. So, acquiring credits, buying into projects and things like that, but also delved into the early product designs of some of the blockchain carbon finance products that were rolled out. And towards the end of 2022, I made the transition to my current firm, which is a private equity owned ecological restoration company in the US that does mostly wetland mitigation credits and species mitigation credits. So, more of a niche compliance carbon market, or I would say environmental attributes market in the US. And then me and a couple of colleagues were brought in essentially to spearhead a carbon effort as part of RES, just to basically broaden the types of ecological markets that do touch beyond just wetland mitigation and species mitigation. So that's the path towards res, and yeah, that's where I am today as a sort of director of carbon.
Thank you so much. So I have two questions that come to mind. The first question is why carbon? And the second question is, can you define what carbon finance is? And you can pick any question first.
Yeah, so why carbon? So I think a couple of reasons. One is it was basically happenstance. The last project I got involved with in McKinsey was directly related to basically providing financing to frontier climate technologies like direct air capture, green hydrogen, and sustainable aviation fuels for a client that's in this space. And it became very apparent to me that these technologies, A, were too expensive, and then B, they're really not going to scale unless there's a financial mechanism to incentivize capital to come in at the right place, and the government to provide strategic support in order for these projects to be built. And unless these mechanisms are in place, we're not going to get to our Paris targets or anywhere close to it. And there I got basically a perspective into the voluntary carbon markets. And this was back in the early parts of 2021. And it was a very broken market. It has shifted a little bit since then, but I would still think it's kind of a fragmented, underdeveloped market that requires a lot of attention. So to me, because my background is in finance, I just thought carbon markets would be the right place to add value from a personal perspective. And I just thought having a very strong carbon signal is one of the prerequisites actually for us to actually have any types of scale in these climate solutions. So that's why I picked carbon. So in terms of what carbon finance is, it's very basic, really. It's basically the ability to put a price on, externalities, I would say. So, if you think about carbon in general, what does it mean to actually put a price on externalities? Is the pollution that we put out in the air, the damage that we do to the environment. A lot of those externalities are today not priced, and they're hidden within sort of the system. And because it's not priced properly, a lot of industries and a lot of companies are very extractive as part of their core business and without paying a price for it. And that creates a huge problem because the solutions that would prevent catastrophic climate change do not have a real revenue mechanism for them to be funded. And the only way that for them to be funded today is either through very archaic sort of regulation. So, for example, if you have sort of a waste management plant, a landfill or something, there's state level regulation that forces you to do certain things. But other than that, you're not incentivized to basically invest in innovation that would change the status quo. And that's why carbon finance exists. It's basically put a price on these things that, we're doing to the environment that are negative externalities. And then through pricing and putting a price signal out there, we're incentivizing investments in this space of critical technologies that we require basically to alleviate a lot of the damages that these externalities create.
Wow. So I have a list of questions that, I alluded to my wonderful team here at Thallo that they wanted me to ask because they were not able to be here today. And some of these are quite interesting. And so I'm going to start with one of the first ones up here, which is how can we quantify and validate the effectiveness of various carbon offset strategies in real time? And what role does financial technology play in achieving this?
Yeah, so I would say carbon offsets, there's a lot of different types of carbon offsets out there. There's offsets that are created upfront for anticipatory action. So you anticipate that you're going to basically protect, let's say you take forestry, for example. There's a land with a lot of trees on it that are critical. I anticipate I'm going to protect this piece of land and you pay me a bunch of money up front for me not to do damage to it. That's one form of it. There are other carbon offset strategies in which it's more of an ongoing monitoring system, and this is kind of the mainstream mechanism in which you get paid a certain number of credits every year or every few months, and then you have to do ongoing verification that you're actually doing what you're supposed to be doing, and you get credits that way. So, how technology can actually help? I mean, technology can help a lot in sort of quantifying and validating these offsets because right now, a lot of the verification process when it comes to these offsets in determining whether they're effective or real are based on manual verification of folks flying into the field, doing measurements, sometimes very crude statistical measurements on small sample sizes to verify whether things are happening. And even if you have sort of very robust measurements, you would require very labor intensive travel. So, folks to fly basically from the global north to these remote regions to do on the field verification. And that's, very expensive and it's time consuming. So, it just kind of slows down the verification process of these projects. And they don't get to always issue the carbon credits in time. And we're kind of seeing a lot of the problems right now is a lot of these projects are kind of stuck with the registries and not being able to issue credits in the timeframes that they want because it's, the verification process is so outdated. So technology can definitely help. When I say technology, things like remote sensing, so using just third-party verification data either from satellites or IoT devices on the ground to collect necessary data instead of using sort of manual measurement processes. Like these things can help. And if we scale technologies like that, the hope is at least that we're going to collect A, more robust data, B, more objective data so that it's not subject to a lot of human biases to measurement. And then C, it kind of gives the comfort to the buyers of these credits, which a lot of them are buying on a voluntary basis. Basically, it gives comfort to know that, okay, I can objectively check that, me putting money into this project actually leads to positive action. And that's something that, I feel better about because I can check through these sort of data sources that are not, influenced by anybody or cannot be meddled in by anybody. So that's some of the examples I think, that would technology could help. And, broadly, that's what we consider sort of MRV, sort of, measurement, reporting, verification process of the carbon issuance cycle.
So, what are your thoughts about using technologies such as AI? Everybody seems to be using AI right now in their businesses and in their everyday practices. Is that something that you see being helpful or harmful when it comes to improving the credibility and effectiveness of some of these initiatives?
So I think from a general perspective, it's definitely helpful to bring something like AI into the fold, and with some caveats. Obviously, I'll get to that at the end. I think AI, basically, to me, is just a faster way to kind of build statistical inferences about facts. So, if you think about like carbon, it's not truly a physical commodity. It's not oil, it's not gold, it's not something you dig out of the ground. It's effectively just information. So you're just collecting information on a piece of land or, a pollution mechanism, and you're basically measuring data. And to me, because the input is pure data, it stands to reason that having sort of more robust, more efficient, and larger scale statistical inference tools like AI and to process that data should be a good thing. Now, and I think, because of the data that we deal with climate change is so big, the data sets are so huge, right? Think about like the amount of image data we need to process from satellites, the amount of, for example, methane leakage that we have to measure from like IoT devices. We're talking about massive quantity of data. And I think like at some point you do need these machine learning or AI tools in between to kind of process that volume of data with some caveats. I think with AI are biases. AI, depending on what kind of data, and this is speaking from somebody who has a cursory understanding of AI, but if the data set that you use to train these models are biased in some way or not managed properly, that could lead to kind of a garbage in, garbage out situation. So I think AI is great, but I think you really need to have high quality control in input data in the upstream, and you have to sort of take care when you train these models to ensure that they're not giving you basically outputs or measurements that are not consistent with the objective of these carbon projects. They're so biases and things like that should be weeded out in the sort of model training process. But I think generally, I definitely think it's a good thing to be incorporating these tools.
Have you seen an example of where using like AI or blockchain technologies have gone wrong?
Yeah, I think not personally. So I'll give one in sort of, I guess not specifically blockchain, but kind of Web3 carbon, but the other is kind of AI. I think like for AI, for example, I've we've all kind of heard about these examples in which AI would give advice on sort of employment. For example, if applicants apply for a job with a company and use kind of AI tools to weed out candidates, you sort of basically make projections on how well these candidates will likely perform, and you give sort of past data, sort of past employee performance data and correlations, and you feed these variables to these AI models. It could give very biased projections on, especially affecting sort of people of color, women, that traditionally the correlations between performance maybe with some of these groups are not affirmatively adjust, and the model just gives you bias readings on what should be done. And I think that's those outcomes is something that we need to actively avoid. So those are like things that we definitely need to take care. because AI fundamentally is a statistical tool. So whatever inputs you give it, it just makes inferences based on the past. But the past is not always representative of what we want the future to be. So, if you make that direct connection, you don't always lead to very affirmative policy actions. And to me, that could be a huge problem. In terms of blockchain, I think right now, crypto, blockchain, Web3 in general, it's kind of growing up as an industry, just given the economic environment, kind of tough right now. So I think a lot of people in this field are sort of really having to think deeper on, how do we interface with regulators? How do we interface with the broader mainstream economy to ensure that, blockchain, crypto, and the Web3 community has a rightful place? So we've seen the tools of blockchain and Web3 being misused, and a lot of crypto projects that are not super conducive to society, or don't really serve a real purpose other than folks trying to make a quick buck. So I think, if we deviate away from that and change the narrative of the blockchain community, and actually using blockchain tools to make real changes, and apply it to real problems, I think that's the direction we should go, and avoid some of the early mistakes that we see in the crypto space, and things like that.
Thank you so much for that. I want to kind of shift a little bit to another question that I've gotten from the team. And this question is, what kind of regulatory frameworks or incentives do you believe are necessary to accelerate private sector investments in carbon offset projects? And how can we balance the need for profit with environmental responsibility? I think that kind of ties into what you were talking about earlier as well.
Yeah, I think it's a really good question. So, what kind of regulatory frameworks and incentives? I think right now the biggest problem facing carbon finance in general is, and I speak as, just generally from the U.S. perspective, because there are sort of carbon markets that are built globally that are a little bit more robust and better. But from the U.S. perspective, at least, I think what we definitely need are compliance markets to scale and to be more broadly encompassing, because voluntary carbon markets have a place, but it does not have the same teeth as the compliance markets on industry, and thus it does not drive the same level of action. And we've kind of seen it in the last 12 months. The volumes in the voluntary carbon markets have been very, very volatile. So a lot of these projections that the voluntary carbon market are going to scale, 50x, 100x over the next couple of years looks grossly optimistic in my perspective. So I think, the voluntary carbon market alone cannot do the job, and the governments really have to step in and ensure that there is regulation and compliance market signals for some of the things that we want to do. To give a very good example is the IRA, so the Inflation Reduction Act that was passed. It was a very good step in the U.S. in putting, price signals on things like direct air capture, carbon capture, use and storage, so CCUS, as well as hydrogen and some of the other technology pathways. But there's nothing in there for nature, which to me was a little bit disappointing, in that, we truly cared about the protection of nature and the protection of biodiversity. And the only way to really instigate that is through sort of a compliance price floor, the stuff that you kind of see in California. I think, having the government step in and provide that price floor would be really, really useful in instigating institutional capital and bringing real money into this space, and other than just more philanthropic or voluntary capital. How can we balance the need for profit and environmental responsibility? I think the way to do it is not through regulating the actual price. So I think the way that it should be done is the carbon price should be the carbon price, right? Like, the carbon price should reflect the cost of pollution. It should reflect the cost to bring in technologies. But I think, for all these different types of policies or carbon projects, there really should be a stipulation around the division of revenue. So I think, once there should be a condition attached to all these carbon projects saying that, okay, well, because you are, for example, like if you're developing a forestry project in Brazil and you're asking the local community to be involved to help protect forests, well, yes, you can kind of pay them the living wage and help protect the forest, but the project should not be overly extractive in that there should be a clause in there saying that a portion of the revenue should be recycled back into the community so that they get basically upskilled into sort of the next rung of development so they don't get trapped in this sort of perpetual cycle of poverty and that you're basically extracting them, carbon value without recycling some of that capital back to uplift the community. Because what we really want to do with carbon projects, in addition to protecting nature and everything else, is try to accomplish some of these social missions so that some of these communities can basically lift themselves out of these cycles of poverty so that they don't have to rely on some of these very extractive methods to earn a living. And that to me is a very effective way to actually eliminate some of the environmental damage that some of these communities have to do to the land in order to survive. So it's not just about protecting the communities per se. It's also about ensuring that the carbon project itself or the environmental benefits that you're bringing has longevity. So I think that idea of like making a project, yes, earning a profit, but also having some kind of recycling of capital back to the community. I think that's a very important aspect of every carbon project.
Thank you so much for mentioning that. That like speaks directly to my heart and soul. Before we go on to any more questions, I just want to know if the audience has any questions or if anybody wants to come to the stage, raise your hand and I will bring you up here. Whew, this I am learning so much from our amazing guest, Nick. And so now I want to talk about what are some innovative or financial mechanisms, investment models that can attract more private sector funding for some of these carbon offset projects, especially in some of these developing countries you were talking about or underserved regions.
Yeah, so I think that idea of kind of a development fund, or let's say put it in a very concrete example. Let's say you're putting a carbon project in a remote region of Brazil, and that carbon project, let's say, earns $100 million of carbon revenue over 20 years. That $100 million, a portion of it should be recycled back to the community in some kind of development fund. So that's like the very basic thing. How to achieve that, I think there are very neat things that you can do on the technology side that are actually super innovative. For example, stipulating, how that fund could be used in terms of upscaling the community and then having some kind of innovative measurement tools. So I think there are some back in the day when I was more involved in the blockchain space. This is the idea of having basically these kind of utility tokens, if you will, to kind of allow people to accrue value to themselves through owning some of these tokens and doing sort of accretive activities on the ground. So if these communities do certain things around planting trees or protecting the soil or things like that, they can actually earn additional revenue by doing these activities beyond what the scope of the carbon project is. So that could be a very neat example of having incentives micromanaged in the community. There's also things like, in addition to the carbon revenue sharing that we're doing, you kind of incentivize them to build capabilities for themselves so that, they're learning a skill. So I mentioned growing trees, for example, but if you think about mangrove projects that are super labor intensive in some of these countries in which you have to mobilize tens of thousands of community members to actually do the drudging, to actually do the planting of the mangroves by the shore or by the beach. It's very labor intensive, but it's frequently done with expertise that are airdropped from the global north. So you have some consultant or somebody from the US or Canada or UK coming in and telling the locals what to do. And they kind of just follow instructions and implementing this carbon project. I think initially that's probably the only way to do it because there's actually no knowledge locally on how to do this methodically. But there should be some level of knowledge transfer. So at some point, these communities can actually skill themselves to the point in which they would have, let's say, the ability to form a co-op or a company, and they can actually bid out their labor to do similar projects in other regions around where they live. so they can actually start earning wages to do that. And is this, not just relying on complete expertise airdrop from somewhere else, but the ability to kind of start upscaling themselves and learning to do some of these things themselves and actually building a business or creating economic value to themselves so that they're seen more of a commercial partner and not just like a target for subsidies or a target for philanthropy. I think that's a very useful way to do it as well.
Do you know of any projects that are actually implementing some of those practices that you spoke about?
Yeah, there are a couple of projects, I think, in Africa in the mangrove space that are trying to do this. And they're trying to upskill certain communities in basically trying to help them develop skills around planting, farming, as well as project management skills, the ability to manage projects more efficiently. But those are like very early stage. I haven't seen a project that's full cycle yet. I think the tendency, and this is kind of a problem as well, the tendency from a lot of these investors are kind of still very extractive. They go kind of go into the community and they want to pay the lowest amount of cost possible to get these projects implemented. And the way to do it is just to basically come in and just try to really reduce the amount that they pay and have somebody from other places come in and project manage it. I think that that's slowly changing from some of these more innovative projects in which the sponsor has more of a sustainable mind to them. But I haven't seen projects that are full life cycle yet that have done these.
Thank you so much. I wanted to give a shout out to the Thallo ambassadors that are here in the room. Throw up some emojis, clap your hands, let everybody know that you're here and that you're listening. I also want to give a shout out to Avi, who introduced me to Nick. I'm trying to bring him up here on the stage, and so far I haven't been able to do that. He may not be on a mobile phone, so may not be able to come up here on the stage. So thank you so much for being here, for listening, for showing up and showing out. We love our family so much, and we could not do any of this without our community. Nick, we've been talking a lot about businesses, and so I want to kind of switch a little bit to individuals and smaller businesses and not just corporations. What can we do to encourage widespread adoption of carbon offset strategies to drive collective impact and reducing carbon emissions?
Yeah, I mean, there's a whole host of solutions I think that are available to bring individuals in, but I'm just going to speak from just a very narrow slice of the ecosystem, which is like carbon credits, and I think that's the area I have the most sort of experience and exposure to. I think the way to kind of bring individuals to climate action is, well, a couple of ways. One, I think the most clear way to do it is there has to be a positive feedback loop, I think. And so, what I mean by that is if somebody gives money or if somebody buys a carbon credit, for example, there has to be some form of reward that is presumably beneficial to that individual, so customized to that individual, but also should be reasonably visible. So, for example, if you buy a carbon credit today, if you go on like an airline, you buy a carbon credit, that process is very broken. So you buy, 100 tons to offset your flight from New York City to Los Angeles, for example. You just tick a box and you pay Delta Airlines, for example, for those 100 tons, whatever that amount is. You don't actually see any benefits from doing that other than just saying that you bought these carbon credits. You have no idea what these carbon credits are. You have no idea what these carbon credits that you bought are doing anything on the ground. There's no ongoing monitoring in what you did, so you feel very disconnected from what you did with outcome. And that to me, from an individual perspective, is it discourages further action because I have no idea whether the $100 I gave to Delta was actually used in that way. So I think the way to kind of really change that is to have this feedback loop between when I give the money and when I see the results of my giving tightened and having the signals of the outcomes a lot more visible to the end user. So maybe it's things like, if I buy a carbon credit, you tell them exactly what that project is, what kind of impact that project is exposing to. Ideally, some level of third party verification. So if it's a parcel of land I'm protecting somewhere, maybe like a link towards like a satellite image that basically allows you to say, hey, this piece of land you're protecting, and you can always log back in over time to see that this land is indeed being protected, and there's indeed a lot of deforestation happening around that area, but it's not affecting this piece of land because of this thing that you did. So having that kind of feedback loop being very visible to the user, I think is a huge incentive for individuals to do more in the carbon space. And that's sort of appealing to the goodwill of people. But there's also like, things that, I don't want to put this bluntly, but you can also appeal to other things that people care about. For example, one thing you can appeal to is this idea that people want returns, right? The reason why a lot of people bought into carbon credits, at least in the early stages of development of the sort of the Web3 carbon market, was people were seeking yield and investment returns. So how do we channel some of that desire to invest in carbon for return? How do we channel some of that energy and some of that momentum towards actual good action on the ground? I think that problem, if we can do it properly, and if we can do it with the buy-in of the stakeholders that are currently in the carbon space, that could also be a very powerful force in which we can harness this desires of individuals to basically do more for the carbon space.
I know I would love to know that if I went and bought some carbon credits, that it was impacting the community around me in a positive way that would cause me to want to buy more and to encourage my neighbors to buy more as well. Are there any emerging trends or development in carbon finance that you were like, wow, this is exciting, this is amazing, or you know what, I think that this can actually change something in the future?
So I think in carbon finance, so there's the institutional market, and there's kind of like what's happening in the more of the innovative side of carbon markets. I think one development that I'm pretty excited about is this idea of having sort of traceable carbon tons. So a lot of folks, I think maybe even Thallo, are working on solutions in which you can make the the ability to audit the provenance of a carbon ton throughout the life cycle, so you know exactly when it's issued by who, and then when it's sold to, and who bought it. So you know exactly where that carbon ton came from, and you know where exactly who and bought and sold these carbon tons throughout its life cycle. I think that could be very interesting in that it serves as another thing towards adding transparency to the system, which I think is sorely lacking right now, and it's really affecting the carbon markets because of this lack of transparency, and it also adds to sort of buyers not having a lot of faith in these carbon credits being real. So the innovations I'm seeing around upstream transparency and sort of innovations around that space is very exciting. On the institutional side, so the trading of the actual carbon credits, I think right now is kind of honestly a period of transition on the institutional side. So I think a year and a half ago, there was a huge amount of excitement around people having the ability to trade carbon credits through the futures markets, through these fungible contracts in which you can kind of deliver a carbon ton from this broad stroke of projects into a futures contract and adding liquidity that way. I think that idea is kind of being challenged right now. There's a lot of folks out there saying, carbon tons are not really fungible. A ton from this project is not the same as a ton from that project. So there's a lot of debate on how actually to trade a carbon credit, whether to treat them as fungible or not fungible. So on the institutional side, I think it's actually going through a period of transition, and until the market kind of figures out how these things are actually going to be traded, it's going to be interesting to actually see the migrations of how big capital actually thinks about that. But I think those are some of my observations on that side.
Now, Nick, I'm about to give you a magic wand, but before I do that, I want to ask if there's anybody out there listening who wants to come up on stage and ask a question. Now is the time to do that because we are slowly coming to the end of our Twitter space. So, Nick, I am handing you a magic wand. And in this magic wand, you can make any change that you want in the carbon space. What is it that you're going to do?
Yeah, it's a good question. So I think the biggest thing I would do, given everything that I'm seeing right now in the carbon markets, is honestly to bring government in a more holistic way. My observations of the voluntary carbon markets thus far is the intentions are frequently good, but the ability to execute and the willingness for stakeholders to actually do action at scale really cannot come from goodwill and philanthropy incentives alone. It needs to come from enforcement, and the mechanism to do that is through government compliance markets. So if I had to change one thing about the carbon markets globally, is for governments to develop more robust and broadly encompassing carbon markets in which you're putting prices on things that we want to avoid and you're putting incentives in for things that we want to encourage. And without that, I don't think the carbon markets will have the necessary incentive mechanisms to scale to a level in which it would actually instigate the action that we need to hit our Paris goals. So that would be the one thing I would say I would do.
Thank you so much, Nick. And can I have my wand back? Ed, thank you so much for coming here to the space. Thank you so much for coming to the stage. Is there a question that you would like to ask Nick?
I guess kind of a question, comment. I come from the regenerative ag movement for many decades. And of course, there's an interesting phenomenon that's happened before that makes things complex in the carbon market because really science never really studied the carbon cycle much in ecosystems. Everything around soil and was pretty much looked at through chemistry. The biology, the functioning, we really, I'm talking about academic science and your top sort of leading scientists, just really never studied how soils work. And that's why the regenerative ag movement started, because we thought maybe nature, if we understood how it works, it could be a really way of thinking about how plants grow and how we grow food and how carbon cycles work. And of course, when the climate change issue became really big in forefront and it came about carbon, all of a sudden the major scientists, when they were asked, so what do we do with carbon? It's something that they really knew very little about. And of course, going to the farming community and the researchers that are sort of independent that we work with that actually understand this stuff just wasn't something easy for them to do. They were kind of put on the spot. So I think these carbon credit programs weren't very well designed in the beginning because they didn't really understand how the carbon cycle worked. So, and that's why you're hearing a lot of, by the Guardian stuff, all these articles about these things that are they really accomplishing what they're supposed to. And that's is questionable because I think the main scientists now are just starting to learn this stuff. And, we've been watching on the sideline because they really don't want to take our input, even though we understand the cycle. But eventually with time, they end up getting onto the data and information and they're learning. So it should improve. There's a new approach that farmers are working on called carbon intensity scoring, which is a little different approach at looking at the total impact of an ecosystem, whether it be in fossil fuels and water infiltration, all relating to carbon cycling, as I say, that with nature. And there's also, just I'll briefly mention that it's just really in the last couple of years that regenerative ag leaders and a couple of scientists that have connected with us have realized that we didn't even know how plants grew until recently. We thought that they sort of absorb nutrients out of the liquid, sort of like, you pour on Miracle-Gro fertilizer, it's fertilizer mixed in with water. Plant sort of absorbs that like a sponge as its nutrients, and that's primarily how a plant grows, and that's because of chemical ag. That's what they always thought. Now we've realized that no, actually plants are ranchers. They ranch primarily bacteria. They feed it through what we call exudase that they put out proteins and sugars and stuff out to feed those organisms. They take them in, they neutralize, they oxidize off the nutrients that they need. They actually train them for the future, shoot out what's left, sort of like concept of a seed back out, grow that back up, and it's a cycle. And that's primarily how they eat, which is just completely, it was mind blowing to us to realize. But, that's been the problem. Science hasn't, at the major level, hasn't understood how nature works. And so until they do, it's going to be really hard for them to measure and understand properly, because we can see all the faults. And hopefully, between what the farmers are creating, and maybe we can we're slowly but surely getting the real scientists, to really understand this better. And of course, since when they make a mistake in the beginning, it's hard to say, well, we were all wrong before, but believe us now that we know actually how it works. So you get into that, just politics and, your credentials, because, people aren't willing to think, well, sometimes we learn and sometimes what we thought before just wasn't right. So anyway, I'll just add that point. I think, we're going to get somewhere with this eventually, but right now it is still a pretty confusing market.
Thank you so much for that, Ed. Nick, do you have any comments that you'd like to say to that?
Yeah, so thanks Ed for that. Yeah, I think this sentiment is echoed by a lot of folks in the market right now. Is like, okay, the science isn't very well understood. It's why are we putting these protocols in place? We don't really know what's happening yet. I think my perspective is I definitely agree that everything that we do in carbon should be science led, because fundamentally this is a science problem, like putting carbon back in the ground, or sequestration is just physics and chemistry. Like that's what needs to be understood. It should not be driven by necessarily markets or business cycles. That being said, I think there is urgency to this problem that we're trying to solve, and you're not always going to get the perfect solution. And when you try to solve sort of an urgent problem, rapid iteration is kind of the way to go. So you know that there's an objective that you're trying to achieve, and you don't necessarily have all the tools in place yet, but you don't have unlimited amount of time and unlimited amount of resources to do research before you can actually put implementation and solutions to the ground. So I think the way to do it is you be overcautious in your solutions. So when you implement, you adopt some kind of no net harm type principle to what you're doing, and then you open up to feedback mechanism from the community. And by community, I mean like all the stakeholders, right? Like farmers, scientists, academics, for them to give critical feedback into your methodology, and for that feedback to be critiqued and debated in a very rapid manner, and any changes to be incorporated in methodologies in a very smooth process. I think that rapid iteration cycle right now is kind of missing in a lot of the registry mechanisms for methodologies. These methodologies take forever to adopt changes and go through processes. So having a more streamlined, more smooth, more well-run engagement process with the public and with the academics, and incorporating changes faster, I think is the way to go. But try not to put in the perfect in sort of, what is that saying? Try not let the perfect in get in the way of the good. So I think that's kind of like the way I view carbon finance is like, we have an urgency problem here that we should do something. But obviously, that's everything Ed said. I definitely have agreement with.
Thank you so much for that, Nick. All right, I have one last question from the Thallo team that I'd like for you to answer. Then we're going to wrap it up for this Twitter space. And the final question is, what role do you see forward future instruments or blockchain based pools playing in increasing liquidity and efficiency in the carbon offset market? And how can these instruments be effectively regulated to prevent market manipulation or fraud?
Yeah, so I think futures and forwards are very important, because it allows basically it adds liquidity to the carbon markets, because it allows investors to basically do price discovery on things that are going to happen. So basically, that's the forward market. You're basically buying things that are going to happen in the future, and you're putting a price to it. And having that ability to trade futures and forwards, it just brings a very clear price signal to developers that allows them to build better projects. It allows them to hedge their risk and basically borrow money and things like that. So it's very important. The problem with futures and forwards, and I kind of alluded to this earlier in carbon markets, is carbon is not super fungible right now. At least it's not universally accepted that it's a fungible commodity, right? Like a barrel of oil is a barrel of oil. Even there, you can kind of argue a barrel of oil from Russia is not the same as a barrel of oil from the U.S. So, contracts in commodity spaces are usually traded that way. They treat the underlying commodity as being fungible. That's how you have liquidity. Carbon futures hasn't really taken off because of that problem. Is people don't really believe that project carbon tons coming from project A is the same as carbon project B. So that's why the futures market really hasn't taken off. So unless we solve that debate about fungibility of carbon and how to really slice and dice the carbon market so that you have these like basically these buckets of fungibility and you build futures products just for that bucket, you're really not going to have a lot of liquidity in the futures market. And the way to regulate it, I think you're kind of seeing in this crypto space as well, to engage the regulators early. So futures products in the U.S. are heavily regulated, by the likes of the CFTC and to a certain extent the SEC. So the carbon community, I had a little bit of exposure to this as well when I was at Flow. But as a carbon community, and especially carbon communities that are trying to incorporate Web3 elements into what we're trying to do here, is to try to engage with the regulators early and have more conversations and buy-ins from them as early as possible, so you kind of avoid the pitfalls of having to build an ecosystem that kind of works but trips some of the laws or the policy objectives of the government. And that's the last thing you want to do, is kind of build an ecosystem and having that shut down because it's like not properly regulated or not compliant with the policy objectives of what the government's trying to do in the securities markets. So I think that's the way to go, is to have these sort of early conversations and getting buy-ins from the regulators early on that side.
Thank you so much. So, how can a newbie like me, who don't know anything about carbon finance, start doing a deep dive to learn more?
Yeah, so I think the way folks should approach this is, there are papers out there that kind of describe the carbon cycle. I think try to really understand the difference between the short carbon cycle and the long carbon cycle. Because when we talk about carbon avoidance and carbon sequestration, what we're actually talking about, just from a science and physical perspective. After you understand the basic science of carbon and different methods of sucking carbon out of the air, so like direct air capture, trees, biomass, having a decent understanding of the science, and then I think the next step is to try to understand how carbon credits are actually created. And I think the way to do that is you basically go on the registries. So Vera, for example, is kind of the leading voluntary carbon registry out there right now. They have a lot of guidance papers and basically primers to teach the public about their process and how these things are created, how these things are monitored. So I think, for somebody trying to really get a basic grasp of how the market actually works and how these credits are created, the registries are a really good place to start, because they're basically created as these organizations that are supposed to be very open and public about the way things are done. So they overshare on information rather than undershare. So that's a really good place to get sort of free information on the entire market and how these things actually work mechanically.
And the last and final question is, how can we learn more about you and all the great work that you are doing?
Yeah, so feel free to connect with me on LinkedIn. I'm easy to find on LinkedIn, so it's just Nick Chen. I'm the sort of director of res. There's only one of me. So if you have any questions about carbon or carbon finance, or if you have a project that you're looking to finance, or just generally curious about the way the things are going, feel free to kind of send me an invite on LinkedIn. That's where I'm the most active. Other than that, yeah, it's just please keep paying attention to the way things are happening in carbon. It's a very small space, and there's actually not a lot of us that are active in this space. So I'm sure if any of you are active in the carbon markets in the future, I'm sure we'll bump into each other face to face in conferences and things like that as well.
Thank you so much for taking time out of your busy week to come and chat with me, to chat with our community, to teach us more about carbon finance and all of the innovation that is going on in the space. If you showed up late or if you weren't able to attend the whole entire event, this is being recorded, so you can go back and listen to the replay. I will be making clips as well. Thank you again for showing up in this space, for engaging. And as always, my name is Contessa Louise, the Community Engagement Manager here at Thallo. My door is always open. You are invited to be a part of our family, our community, and all of the great and wonderful things that we are doing here at Thallo. Have an amazing week, and we will catch you next time when we have another Twitter space. Goodbye, goodbye, and goodbye. Thanks, everyone. Thanks again,
Great.
Nick.
Thank you, everybody.